If you've ever wanted to start day trading futures or trading options, but you don't know where to begin, I'm going to show you the most simple 5-minute opening range break strategy when you look at a chart that anybody will be able to understand and will have you making money in a matter of days. Now, you may be asking yourself, who are you and why should I listen to you? And honestly, I'm not so sure that you should, but I do know what I'm talking about, and I have proven it over and over again. I'm not some internet guru influencer who has a Lamborghini and likes to show off my high rise condo that overlooks the ocean. I'm sure that's all nice, but that's just not me. I drive a 2021 Chevy Silverado, but it's nice though. Don't get me wrong, it's nice. But I'm not selling a course. I'm not upcharging you anything. I'm not trying to get you to buy into anything. I just simply started trading and I found this strategy on YouTube. I implemented it with a few tweaks and I was making money within 2 weeks. So that brings me to my last point before I hop into this. There are plenty of financial people on YouTube that say you need to paper trade for 6 months. And then when you've done 1,000 trades, all of that's cool and all, but that's not realistic. People who are getting into day trading want to make money and they want to make it now. So if you don't want to put in that time, I didn't put in that time. I didn't want to. I move quicker than that. I'm not going to paper trade for 6 months because all of the paper trading that I'm going to do during that time, I'm going to see, oh, during that 6 months, if I do the strategy I'm doing right now and I paper trade it, I could have made $200,000 during that time. I'm not going to miss out on that. So here we go from start to finish. This literally is setting up a funded account, setting up your trading view, getting your indicators in place, and getting your trades going. So here's the very first thing we're going to do. We're going to come over right here to TopStep.com. There are a bunch of prop firms that will give you access to funded accounts where you essentially are trading with bigger lines of money for very little risk, but you have to pass an evaluation. Now, there are a bunch of these. I personally prefer TopStep, but there's also Apex Trader Funding. That's another popular one. Just go to TopStep. It's the easiest user interface you can get. If you have no idea what you're doing, go to TopStep. It's the easiest. Just do it. Here's what TopStep is. Become a futures trader. You scroll down here. Let's read this. One rule, one goal, become a TopStep trader. The Combine is our program that helps traders build better skills, discipline, and habits as they are evaluated for funding. Pass the trading Combine and unlock an express funded account in as little as 2 days. A TopStep funded trader can pay themselves up to 4 times a month. So you go through and pick your account size. Do you want to trade with a $50,000 line, $100,000, or $150,000? I don't know anybody who does these two. I watch all kinds of YouTube videos. Nobody is trading on these because they're more expensive. You can lose a lot more, a lot quicker by being able to over leverage. Just do this one. I've had 5 of these accounts. I still have 5 of these accounts. These are what I trade with. It's $49 a month, and this is how they work. You pay the $49, you get access to an account like this in what's called the Combine, which is their evaluation stage. In that evaluation stage, your goal is to make $3,000 right here. Your goal is to turn this 50,000 into 53,000. We understand that. That's the profit target. Your maximum position size is 5 contracts. So you can't just come in and say, I'm going to put 50 contracts on here, and if it goes up $3, I'm going to make $3,000. I'm done. I'm on my way. You can have a max of 5 contracts at one time because you're supposed to build good habits as we go along. The max loss limit is $2,000. Is what that means is you get a $50,000 demo account. You go into a trade, it starts losing money. You cannot lose more than $2,000 of this $50,000 right here. If this goes down to $4,799, this account will be canceled and it will immediately pop up on your screen. Ask me how I know. And it will say, this account has been deactivated. Click here to reactivate it. You then need to reset that account, which is another $49 in a reset. So if you lose this, it's another 49 bucks. If you follow a strategy, you hopefully only pay $49 per month one time. So I've got you here to topstep.com. You click select, you create your profile, you go through, it takes about 10 minutes, and then you have access to a $50,000 funded account. I'm not going to go through and show you how to create an account and do all of that. You can figure that part. If you're considering day trading, you can set up an account. Once you get your credentials and you log in, you will log into TopStepX.com with your credentials and it will look like this. I have a couple marks on my chart from today, and I made this account on November 2nd, which is yesterday. Today is November 3rd at 12:57. So I started this yesterday morning at 9 a.m. on Sunday. When the Asia session started at 3 p.m. Pacific Standard Time yesterday, I went in, I did some trades, and yesterday and this morning, I'm already up $1,300 using the strategy that I'm going to show you in this video. So is what this means is tomorrow, I just need to make $1,700, pretty much the equivalent of what I've done today. I'll land at $53,000 on my balance, and then this will be moved to an Express account. When you get to that point, there is a one-time $149 activation fee that you pay to have your account moved to an Express account. But for all intents and purposes, until we get to that point, right now our out of pocket is only $49. So if you've been talking about day trading, you're going to get into it. Don't be the person that's always, oh, I'm going to do that. And then 3 years later, you're still telling people you're going to do it. Right now, we're out $49. That's it, to have an opportunity to change your life and start making money. 49 bucks. You can come up with that. Don't go eat out. Don't order Uber Eats today. Just you can find $49 to get your future started. Okay, we've come up step. We've created an account. We've paid our $49. We're logged in. This is what it looks like. We're done here. The next thing we're going to do is come over to tradingview.com. It's going to look like this when you log in. Again, up here, you click it, you log in, create your account, blah, blah, blah. You click this little blue banner right here, upgrade early, 70% off. I have 6 days left on my trial. I am currently doing the premium one, and it is 30 days free. So I have been using this one because I just picked it. I wasn't going to do an ultimate. I didn't need that. I just picked this to start. You can pick any of these you want. Any of these will work for what we're going to do. This one is the cheapest. Get a free 30-day trial. You put a card on file. Just remember to cancel it if you're not going to continue with what you say you're going to do. Get set up, and then once you're set up on all of this, your trading view will look like this. You will search for NQ, which is probably the most popular day trading futures that I see. NQ or ES. I personally trade ES. A lot of people like NQ. I just like ES, but it doesn't matter. This is the top 100 companies. ES is similar. They follow the exact same chart. They're just, NQ can be more volatile. So I like ES, but we'll just look at this one for the example. Once you're in here, we need to set up indicators. There are a few indicators you want to immediately have. So let me show you what they are. Once you click the indicators button, this pops up. Yours won't look like this because I already have these favorited. But before we even get to that point, you want to come down here to technicals. You just want to type in volume and just click the basic volume right here. It's then going to put volume up here in the top left. So when you hover over one of these big candles like this one, you can see that the volume is 11,000 when I hover over it in the top left. Then you can see the volume continues, and we get into the afternoon, volume slows down, right? We're way down from where we were when we first opened. This is market open right here. So you can see where the volume is that created this big push down. Okay, the next thing we want to get right here is fair value gap by LuxAlgo. So you'll go fair value gap, and you'll see right here, it's the #1 most used fair value gap. LuxAlgo has like almost all of the indicators I use. I'm a big fan. So click that one, star it, and then it gets added up here in the top left. Now is what this does is it creates these on your screen, and it's called a fair value gap. And so let me just quickly explain what that is so you know what we're looking at. You can see here on this candle, let me get a different drawing tool. Okay, you can see here on this candle right here that we're looking at, there's the top wick up here and there's the bottom wick down here. This chunk right here is not the whole candle. This is called the candle body, and these are the wicks, the bottom and the top, wherever they start. So the bottom wick is here. Then we have a massive full body candle, and then the next candle right here has a candle body and wicks. But you can see where the mouse is hovering right there, there is a candle wick that is part of the body that's up with that. And then right here, there's the wick with the candle body. Price pushed so fast down that it created a fair value gap. And this technically is a liquidity zone is what this is. Price moved so quick that by sellers that buyers weren't able to reclaim this area. If this candle right here were green and it went all the way back up to like right here, match this would not exist, because that means this is no longer a liquidity zone and this liquidity had been taken. But this pushed down so quick that buyers weren't able to regain control of this, meaning that since that didn't happen, this is a bearish signal down. Now we get all the way down to the bottom, and then you can see here, this is where a bullish fair value gap started. And you can tell that by looking at this candle. There's barely any wick that you probably can't even see touching the body right here of this candle. Okay. And the bottom of this wick is right here, created this green fair value gap. So you can see there, it went up. Sellers tried to reclaim it, but they failed. They didn't cover the whole gap. And then it went back, bing, bing, almost cleared right there to invalidate this fair value gap. And then right here, we went bullish and it came back up. So in this scenario, it didn't cover this and that trend continued up. This is part of the strategy. So the reason I explain that in depth like that is because this is important. So that's our fair value gap. The only other indicator that you need is this one right here, key levels. When you add the key levels indicator here, you want to hover over it, and then you want to come right over here into the settings. This is what yours is going to look like. These boxes are going to be checked and you want to uncheck them. You then want to click this one right here, opening range, and change this to 5. You can leave it at 15 if that's your preference. I trade the 5-minute opening range break. And then scroll all the way down to the bottom, and you want to make sure yours says 930 to 1600 and it's queued up for New York. We trade the New York session open with this strategy. You can do it with any session, but this is the one that's going to be the most profitable for you. Then you can see right here, this was created. ORH, opening range high, ORL, opening range low. So now, again, just to show you, if I click this little eye symbol to hide it, it disappears. So this is what this indicator added onto your chart. So I'm going to take a quick break and just recap. We've set up our TopStep account. We have a funded account. We have set up our TradingView and we've added our indicators. If you haven't done that and you're following along, if you haven't written it down, save the video, whatever you need to do to make sure that you do this. You have to do this in order for this to work and succeed. So now at this point, we have our opening range break, or our ORB strategy, off of the 5-minute opening range candle. You can see where this indicator right here, I'll just recap with you, opening range 5 for the 5-minute candle. When we were looking at this fair value gap in the beginning and talking, you can see this line right here is at the bottom wick of this candle, and the top is at the top wick of this candle. The first 5-minute closure created this opening range that we are going to be using as our baseline. So now is what we're looking for. This is called the ORB strategy, opening range break. So where does our high or our low break? And it breaks right here, and it's massive. There's a fair value gap and it breaks below. Going down below opening range low is a bearish signal. Bearish meaning short. It's going down. So if you hear someone say in the news, oh, so-and-so shorted the market, that means they're predicting that the market is going to go down. They're shorting it. If it were to break above, it would be bullish and you would be talking about a long. I'm going long on Bitcoin. Okay, awesome. Bitcoin's going up. So here's exactly, now that we have the indicator set up, we have our zone that we know is our breakout zone of what we're looking for. This is how you would make the play. 5-minute candle closes, creates our zone. Boom, we immediately go bearish right here. Then is what I do. I see this really big, and that's a big caution flag. I'm worried about that, but it all depends on what this one does right here. If this one were green and it came all the way back up and it reclaimed this whole entire zone and canceled out this fair value gap, I would not have entered a trade. But since it didn't, this one closes right here and it moves into the next 5 minutes where it's still continuing down. So is what I would have done right here at this point. I would have came up here to the sell button. I would have clicked it and I would have entered in my sell right around here. I think it's going to go short, so I'm going to sell it. I'm shorting today. So is what you can do when you're back testing is on the left-hand side, you have all these little buttons over here that are overwhelming. This one right here, click the little arrow and you can do a short position. So if right here, you would have made it in the middle, let's say, you could set your stop loss right at the opening range low. You can either set it here if you want to, or you can set it at the middle point. Depending on how close this is to the range, like if we were up here, I would set this at the middle of the range. But since this is so long and so far down below the range immediately, I'm going to just set it at the bottom of the range because worst case scenario, this is a $500 risk for me. Your risk will be different. You set your risk to whatever you are willing to lose. To me, this is $500. So if this green or if this red candle right here immediately went green and ping up to here, I would lose $500, but this is my stop loss right here. So if it were to go above this, it's going to immediately cancel out the trade. I lose $500 and I move on. So is what I'm targeting with this setup right here is a 1 to 2 risk to reward. So with this being a 1, it's saying it's 53.5 right here. So is how you would go about this is you would be 53.5 on your stop loss. You would then drag your target down, and I'm looking for, this is going to be 107 right here. I would set, or roughly, I would then set my take profit at 107 points. I'm risking 1 to make 2. And then as you can see here on this one, where I would have entered the trade, it just goes down, 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 and then this big red candle passes outside. This is my take profit zone right here. It passes outside of that, and at this point, I would have made $1,000. I would have risked 500 to make 1,000, and this would have passed. My take profit would have went off, and I would have made $1,000 right here. So when we come back to TopStep, you're like, how do I actually put this in TopStep? Here's what you would have done. On this screen, you would be looking at the 5-minute chart and you would mark out exactly what this is telling you right here. You would mark out your opening range high and your opening range low because in TopStep, it has indicators, but it doesn't have the indicators that TradingView has. So you would have said, okay, this line right here, 26267. Let me get on the right chart. Okay, now that I'm on the right chart, 26267. You'll click this button over here right below the little crosshairs. This is the line tool. Line up for 26267, which is right here. And you would just draw a line across. And then the low is 26226. So again, the line tool right at the bottom, 26226, my zone. I'll even label it so it's a little bit easier here. Opening range break high, opening range break low. Now, the reason that I tell you that you have to have TradingView is because within TopStep, there's no fair value gap indicator. So you need this one here to mark out your fair value gap indicator to mark out where the fair value gaps are. So is what you can do, since there's no indicator built into this, is you can come over here and click your rectangle tool. You can then see that this is from the bottom of the range to 26189. So we're bottom of the range, 26189. We just scroll it down to right there. This then mirrors and matches what this is. So this is my fair value gap. So when you're in here, right about this point, we would have entered our trade. Is what you can do on the right-hand side is you can click this settings button. This one pull up your position risk and profit brackets. I have mine set at 500 risk and $1,000 profit. This means I'm risking 500 to make 1,000, a 1 to 2 risk to reward. And then you click automatically apply risk profit bracket to new positions. And you save it. Right here, you would click sell. And it would auto apply the brackets, the 500 and 1,000 that you put here. If you click this button at this point, it's going to jump up here and say $500, and it's going to jump down here and say $1,000. The 500 will be in red and the 1,000 will be in green. And then at that point, you're in the trade. If you want to get out of the trade, let's say you go into it here and it immediately starts going boom, 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 boom. And you can just click flatten all and it'll close the whole thing. If you know you're going to lose, just flatten it out and close it, move on. But is how I operate is once I know that I know it's a bearish day and the fair value gap is there, once I click the button, the money is gone to me. I either lose it or I make it. So you need to have a little bit of conviction and trust in what you're doing to let it play out. But that's exactly how you would have done it. You would have seen it over here. You use this chart to mark up this chart. And then wherever you take your entry point, these brackets will auto set for you. I was in my other account. That's why it's different. These brackets in here will auto set for you what you want to do. If you click sell, that means short. If you click buy, that means long. It's going this way. Long is going up. That's a buy. Short going down. That's a sell. So just recapping with you what we went through. We talked about how you always say you're going to do it and you don't ever do it. So this is how you do it. You go to TopStep, you spend the $49. You go to TradingView, you set up the free 30-day trial. You will know within 30 days if you're going to do this any longer. If you're not going to, just cancel it and go on about your life doing the same old shit you've been doing. If you decide in those 30 days, you have an opportunity to make money using this exact strategy. This is all I do. And in the last 30 days, I've made over $15,000 using it. This is it. All I do is this strategy, what I just showed you. I don't do anything different any day. I use it in the New York session open and I use it in the Asia session open, which starts at 3 p.m. Pacific Standard Time. This might not be the best strategy out there. It might not be the most perfect strategy out there, but it's the one that works for me and it's the one that pays my bills and how I make money. And I get money to invest more money by doing this. This is exactly what I do 5 days a week. Now, a trade doesn't always present itself every single day. So most weeks I end up trading 2 to 3 days. If this exact situation that I showed you in this video does not present itself, where there's a break below the opening range number, high or low, and a fair value gap is present that does not get reclaimed, I don't take a trade that day. I wait for those two things, a breakout and a fair value gap. That's it. I go in with conviction. I let my trade ride out, and I've been profitable for a long time.